Welcome to another session of OOIDA's Business Education Series. OOIDA is proud to offer the most comprehensive business education series available for America's professional truck drivers. We would like to thank our many friends in the industry who take educating America's professional drivers as seriously as we do. With the help of these sponsors, we've been able to make the programming on the Business Education Series free to all drivers. This program is being sponsored by our friends at Taxation Solutions Incorporated. When you need tax consultants with experience, the right credentials, and the ability to help with penalty abatement, audit defense, and tax settlements, look no farther than Taxation Solutions Incorporated. Taxation Solutions has experienced tax attorneys and enrolled agents that have assisted taxpayers with negotiating and settling their IRS debt. Their overall goal is to get you only the best deal available with IRS relief. Live again without the fear of the IRS. Contact the professionals at Taxation Solutions. You can reach them on the web at www.taxationsolutions.net or by phone at 888-997-2215. The topic for this series is dealing with the IRS. In this series, we're going to be discussing tax issues which, unfortunately, are all too common in the trucking industry. And in this program, we're going to be talking about negotiating with the IRS and what you can expect. My name's Tom Gann, and once again, I have the pleasure of hosting this program. Again, for this program, I'm going to be joined by one of the heavy hitters in the tax industry. He frequently appears on CBS, ABC, Fox, Yahoo Finance. You may hear him on the Joe Pags Show, and he's a frequent guest on the Red Eye Radio Network. I truly am honored to have Barry Fowler as our guest on this program. Barry is the president and founder of Taxation Solutions Incorporated, and he also holds the title Enrolled Agent. And for those of you who don't know, this enrolled agent status is the highest credentials the IRS awards. These enrolled agents, they're unrestricted as to who they can represent. They can represent their client for any type of tax matter, and they can also represent them in any IRS office around the country. Barry's been recognized as one of America's premier experts in IRS relief and taxes. He's helped hundreds of people solve complex tax issues with the IRS, and we're truly honored that he's agreed to be with us here today to share his insights. It really is quite an honor. Okay, in our first program in this series, which was titled When You Have a Tax Problem, we talked a little bit about an offer and compromise. And what you said was basically that's negotiating with the IRS. So let's expand on that just a little bit. Tell me a little bit more about this offer and compromise.
Well, offer and compromise is the IRS's way of negotiating your tax debt. They offer that as a program to get taxpayers back into the system, back paying, and get them current and not have to pay the full amount of tax that's due based on the situation. Now, the next question would naturally be, does everybody qualify? No, not everybody qualifies for an IRS offer and compromise. You've got to meet very strict and stringent requirements to be able to qualify. And we use a lot of critical concepts to help our taxpayers and our clients get them down there, and we'll explain some of those as we go here today.
Well, let's just talk about some of those critical concepts. You know, Barry, just that term critical concepts, that sounds like it's something that's extremely urgent, something that you certainly don't want to forget. Is that what we're talking about here? Something that you need to do and need to do it right away?
Well, what we're talking about is a very aggressive approach to limit the assets that are available for the IRS to take. And most of the time what we're talking about is our clients' trucks, our clients' homes, and of course our clients' bank accounts and retirement accounts. So what we try to do is use some concepts to where we can limit the cash or use the cash for things that need to be done that maybe you've put off. So we get clients that are truckers that have put off maybe maintenance on their truck and they need to go get stuff done. That's a great use of cash. So it limits the cash that's available to the IRS. Or maybe you're on the road so much and you've neglected getting things done around the house, and you might need a new roof, you might need some other stuff done at the house, AC, shower, whatever it may be. It's another great use of cash.
Now, wait a minute. Obviously, I'm having some financial problems. Are you suggesting that I should take what cash I have left and, just, hey, I need a new air conditioner? Should I go out and buy a new air conditioner for the house?
That's exactly right. That is what we're trying to do with our clients, because if you don't use it to put a new AC in or maybe fix up a truck or do some other work around the house, then the IRS is going to take the money anyway.
Now, if I use that money to have my engine rebuilt, do I have to prove that it needed to be rebuilt?
Absolutely not. Nobody's asking for proof that it needed to be rebuilt. They may ask for proof that you paid for it.
Yeah.
But they're not going to need proof that you actually needed your engine rebuilt or needed something else done on your truck, a new seat in your truck, or whatever it may be. And also, that's a business expense, so it's also deductible on your taxes as well.
Now, when you're talking about that, are you talking about using the cash that I have on hand, or can I go out and charge that new engine rebuild?
You could actually do either one, but what we're trying to do when we're doing these critical concepts that we're talking about here, we are actually trying to get rid of cash that is sitting in your bank account. Because when you file for the offering compromise, we're looking at what cash is available to pay the IRS. If you've got $10,000 sitting in the bank, well, the IRS will want that $10,000. But if you only have $50 sitting in the bank, the IRS only wants your $50. So you have multiple ways we can do this, but we're trying to limit cash. Now, does that mean I can pull the cash out of my bank account and put it under my mattress? Absolutely not.
They want to know what you spent that money on, don't they?
Yeah, they want to know where you spent that money on, but they also want to know on that 433 we talk about, where all your assets are. Cash has got to be reported as well. So if you have cash sitting under your mattress or in a safe, you've got to report that as well.
Let's talk about the timing of this just for a second. Should I try to get rid of this cash or use this cash up? Is the timing critical? Should I do it before I make the offer and compromise, or do I wait until after I've made that offer and see what the IRS says? When do I do this?
There are two times that we do this. We do it before we file that offer and compromise. So before you send in the forms, and you're going to send in with the offer and compromise, your bank statements and stuff for the last 3 months, we want to see all that cash out of the bank. And then there's going to be one other time, and that is going to be when the IRS starts asking questions about your offer and compromise. So that could be anywhere from 6 months to a year or so down the road. They're going to want to look at what your current financial position is as well, so we want to make sure that account is drained as well when they start asking that question.
In one of our previous programs where we were talking about what you can do once you discover you have a tax problem or a problem with the IRS, we talked about a couple of forms, and one of those forms was a 433A, another was a 433B. And what we talked about there was a 433A is your personal financial statement. The 433B, we discussed that was your business financial statement. You mentioned that when you fill these two forms out, you're giving the IRS a roadmap to everything that you own and that your business owns. Now, that seems to me like it should be everything, but I know the IRS, they've got a lot of forms. I see there's also a Form 656. What is that?
Well, the Form 656 is what takes the information from those 433s to present the offer to the IRS. Now, what that 656 basically does compiles all the information from both of those and then comes down to what you can afford to pay to the IRS monthly or in a lump sum balance, because you have multiple options. Now, what that 656 is also going to do is actually total up all your assets and available equity in all your assets to come down to a number. Now, it becomes very complex, and once you start looking at a 656 form, you're going to go, wow. But what that 656 does is going to take and say, here's your equity in your home, times 80%, which is basically a fire sale value, less what you owe on the house, and it comes down to equity available for the IRS. And they do that for each of your personal vehicles. They're going to do that for your retirement account. And then they're going to start doing that for some of your other assets that you may have if you happen to have a boat or other property out there. It does it for every one of those to come down to what's available to the IRS. Now, it doesn't mean that's what you're going to pay. It just means that's what the IRS thinks is available, and then the job is to prove that you don't have that available or you can't access that equity in those assets in any way, shape, or form.
Now, when we talk about putting a value on these things, for instance, my home, I think it's worth more than it probably really is worth. How do we come up with those numbers?
Well, what we do a lot of times on the home and other assets is, on the home, we may go to Twillo or something online to get you a relatively good price on what the homes around you have been selling for. It'll even give you kind of a market value. If you've got, like, in some areas, in some states, they've got appraisal districts who charge you property taxes and already appraised your home, and you could use those numbers. We'll use whatever number we can find is the lowest. And then you've got to revalue that number as well for things that your house needs. So if your house is a little bit run down or needs a new roof and you couldn't afford to do it, you can show some of those deducts as well, because your goal is to get to the lowest market value possible.
So what I want to do is really the exact opposite of trying to sell my house. I want to go out and get an appraisal for the lowest value I can get. Then I want to look at everything that's wrong with the property, and I want to deduct these negative values from the lowest appraisal.
That's exactly right.
Okay, Barry, I know when we fill out these forms and we put a price to everything, I know the government has what they call a national standard, and man, that's like Greek to me. I don't know what they're talking about. Can you explain that just a little bit?
Well, the IRS has basically set up a national standards for 5 different expenses. That includes food, apparel, your home, transportation, medical. The national standards is what they're going to use as their basis to whether you're going to qualify for this offer and compromise. So like your national standard for housing, it may only be $2,269 if you lived in one of the counties in Florida. But your expenses may be much higher than that. So you've got to make sure that what you do is able to support the difference between what the IRS says is a national standard for your area versus what you're actually paying. When you're doing a 656, you've got to make sure you've dot all your I's and cross all your T's so that you can prove that, let's say medical expenses, they're going to allow $180 for you, that maybe your medical expenses are $500 a month. So you've got to be able to support those differences and get above those national standards. Otherwise, you're going to be stuck with what they tell you is allowed based on a national standard.
So if you go over on your food expense, can you justify it by saying, I'm really fat?
Absolutely not. And that's one of those that,
I was afraid of that.
You may be able to justify it by that, your actual expenses are a little higher because you got more kids and stuff, and your kids are eating more. But because you're overweight or because you just happen to eat more or you happen to eat steak every night, that's not a qualification.
Okay. Do you have to show the IRS how you came up with those numbers?
We always do. And the reason is we don't want them to ask a question where it's not needed. So if you go online and you pull Twillo and you get your market value, and then you show, hey, I need a new roof and I need this and I need that, and show deductions on there, they'll take that for what it's worth and go forward from there.
That's obviously one of the big advantages to using a professional instead of trying to go at this on your own. That professional understands through experience what the IRS will accept and what they won't.
If you don't show any of that, then they're going to come up with what their own value is, and it's generally higher than anything you or I would come up with. And then they'll want their money after whatever equity's in the home.
Mm-hmm.
And it's the same with your vehicles. When you go out there and you're looking at your vehicle and you go to Kelley Blue Book, you can get a value. And you can get 3 different values on it. You know, what's your wholesale trade-in, what's your retail value, and then you also will pick what kind of condition your car's in.
Sure. I bet mine's going to be in bad condition now, isn't it?
Car's going to be in bad condition. It always needs something. You know, if you were to trade it in, they'd go, hey, every little ding and dent on your car is a deduct, right?
Absolutely. Hey, when we're doing this, I'm a truck driver. I'm not an accountant. I'm not a bookkeeper. I'm going to have trouble coming up with these numbers and filling out this form. When I go to a tax relief organization like Taxation Solutions, do you guys help me do all this, fill out this paperwork?
Yes, we actually walk through and do it all. The things that you have to provide us, maybe loan balances and what your payments are every month. You're going to provide us business income and expenses for the 433B, or if we're doing bookkeeping for you, then we would have that readily available. So we'll be able to get all that information from there. Now, the value on your home, the value on your personal vehicles, we're going to go to Kelley Blue Book and we're going to price it for you. We're going to go in there and put that information in. We're going to value your other assets whichever way we can. We may ask you for a little bit of help on that, but generally we can get good values off that and limit them.
And how long does this normally take to get all this put together and prepared?
For us, it depends on how cooperative our clients are being in getting us information. For the average taxpayer and trucker, I would venture to guess this is going to take them anywhere from 4 months to 6 months to put all this stuff together, just because they're on the road so much.
Mm-hmm.
If you were sitting at home and able to spend a few days concentrating on this, you could probably get it done in a few days and get it off to the IRS.
Yeah, I just couldn't imagine having this hang over my head that long. I just said that I would hate to have this hanging over my head, but maybe that's not such a bad thing. Is it good to have this drag out and take a long time, or would you rather get this settled just as quickly as possible?
Yeah, the good and bad part, and we kind of talk a little bit about pitfalls and traps of different options of settling debt. In the OIC.
And just a reminder for our listeners, OIC stands for Offering Compromise.
Yeah, one of the big pitfalls is that it stops the statute of limitations. One of the benefits of doing an OIC, it actually stops collection activity as soon as you file it with the IRS. So they're no longer able to lien, put a levy on your bank account, garnish your wages. All that collection activity stops until they process the offering compromise. And then once they process that offering compromise, whether they accept it or reject it, at that point, they can resume collection activity if they reject it. The other pitfall with this offering compromise or negotiating your tax debt like this is that you have got to be in complete compliance with the tax laws for the next 5 years from when it's accepted. Now, what it really starts is the day you file it, you've got to be in compliance, and all the way through 5 years after they accept it. So that means you got to make your estimated tax payments timely. That means you got to file your tax returns timely, and you've got to full pay any debt that's due with every tax return.
So if you get behind on your taxes, say 2 years down the road, they can come back and reopen this whole piece.
Basically, yes. It does away with the whole offer and compromise like you didn't do it, and all the debt plus penalties and interest all comes back.
Wow.
So you got to be very careful when you're doing this, and that's part of making the choice of if I'm going to negotiate and do an offer and compromise with the IRS, that I realize I've got to be in full compliance. And that's a great reason right there to make sure that you got a professional working with you on your bookkeeping and on your taxes.
Now, it's easy to say, you should go out and get a bookkeeper or a tax person, but when you're operating on a shoestring or these guys who are just new to becoming an owner-operator, that expense can be almost overwhelming. And, sometimes it's awfully tempting to go to that box store tax person and have them do your taxes for you. But sometimes these expenses that you think you're saving money on end up costing you more than you're saving.
Yeah, and we meet a lot of truckers along the way, and as much as we work with OOIDA, and every trucker we run into, sometimes it's just hard to say, hey, I can have that extra expense to do the bookkeeping or to do the taxes and stuff. But that extra expense sometimes saves them a heck of a lot more than what we could ever charge them.
Barry, I want to go back to one thing you had mentioned earlier about once you start this offer and compromise process, that stops all the collection activities. But let's just say my fuel card, I need to charge fuel. Am I still able to use that card to charge fuel, even though maybe I owed quite a bit of money on it when this whole process started?
If you're owing a lot of money to the IRS, it's not going to mess with your fuel card. You're still going to be able to charge on it. It's not going to stop the credit and everything else you have available to you. All it's going to do is stop the IRS from collecting money from you, and they're not going to stop the notices. You're going to receive a notice saying that your offer and compromise is pending, and they'll get to it in 6 months or maybe 8 months, or they may even, after 6 months, send you another one saying it's going to be another 45 days.
Okay, so this is stopping the collection activities only with the IRS, not with the creditors.
Not with the creditors. If you owe a bunch of money to the creditors, that's a whole different problem than the IRS.
Okay. Yeah, I think that's one thing that guys get a little confused on. I started this process, but I'm still getting all these phone calls.
That's your other debt, and that's where the bankruptcy could come into play to help you later on. And you got to remember that we talked about bankruptcy in the last one, but bankruptcy doesn't always solve your tax problem. It may solve some of your other debts, but the problem you have with your taxes, depending on when you file the return, it may or may not discharge your tax debt. But if you do bankruptcy before you get your offer and compromise settled and done, then all of a sudden you now have more cash available because you don't have all the other expenditures out there to pay more on your tax debt. So it's not always which one should come first. It's the best way of getting it done.
Okay, it looks like we're completely out of time. If you've got any questions or comments about this program, or if you'd like a certificate of completion for this program, just send us an email to businesseducation@ooida.com. And don't forget to tell us which program you're referring to. Before we get off the air, let me take a minute to remind you to thank our sponsor, Taxation Solutions Incorporated. If you're having a tax problem or you're in need of strong, aggressive representation to deal with the IRS, the professionals at Taxation Solutions can help you reach a resolution by providing the proper knowledge, action, advice, planning, and preparation. It's not too late. Contact the staff at Taxation Solutions. You can reach them on the web at www.taxationsolutions.net. Yes, .net. Or by phone at 888-997-2215. We hope you'll join us online again for additional programming in the OOIDA Business Education Series. This series has been designed to give serious business education to truck drivers who take their business seriously. And don't forget, OOIDA has been fighting for the rights of all truckers since 1973. You can join the fight by becoming a member of our organization. Give us a call at 800-444-5791.